Do you ever feel like prices are in a random walk, whipping around without too much of a reason? You might be a step too late, you might be chasing price on the wrong side of the move. What if I told you that the answers are right in front of you? They may be hidden, but they're buried right in volume itself. So most traders, they use volume to find points of control, areas of support, but they miss the big picture. In this video, I'm going to be breaking down the composite volume profile and how to use it correctly. There's a lot of misconception around how volume profiles are used, and I'll break down step by step what we're looking for in a composite volume profile to understand where real value actually lies in the market and where the market is balanced and how to spot shifts even before they happen. So if you guys are excited for this video, let's dive right into the screens after this intro and we'll break it down. A composite volume profile is seen on the screen here. We've got two charts on the S&P 500 and the NASDAQ side by side. On the left side, we've got the S&P, and on the right side, what we got is the NASDAQ. And the composite profile, right, is going to be the gray area here on the right-hand side, and also the profile beside it. So let's break these down first and foremost. A composite profile is a volume profile distribution built over several days. It can be built over weeks, months even, rather than just one individual session like the other volume profiles you see here on the screen. There isn't necessarily a strict rule of how many days a composite profile is to be made of, right? But you can have a plethora of different profiles, and I'll explain exactly what they mean when you use different lengths. It shows us where the market has accepted value over weeks, months, even years. And you can think about it as an X-ray of the auction showing where buyers and sellers have done their business consistently rather than impulsively. So it gives us context. Instead of reacting to price spikes, you're asking, is this happening in fair value, or are we entering a very thin spot or an aggressive spot where prices can explode? So the composite volume profile allows us to see a culmination of volume that is created at any time where balance is created in the most recent few days. That goes as far as back as 6 months, or even further realistically. Rather than looking at just basic support resistance on a price action perspective, we can understand based on these composite volume profiles over the last however many days, where the heavy-handed market participants have actually shaped up. So the kicker is, unlike multiple time frame analysis, no matter what size of composite profile that you use, you're going to see the same areas of balance and imbalance as you increase or decrease the size. So you're going to see confluences all throughout. For instance, if we take a look at this NASDAQ, we'll take a look at the S&P in a bit, but even if we look at both of them side by side, so this grayed out volume profile, very thinly shown here on the right-hand side, is the 400-day composite profile. If we look at this at face value, it doesn't really give us too much information per se. We might say, okay, well, that's great, but it's very bland, it's very thin, it doesn't really give us too much. Even if we can't use this, what we can see is, okay, realistically on NASDAQ, you have a general balance that's shaping out from here and one from here. Eventually, they might combine, but for now, we have those two split up. The bottom band of the lower one is around 330, and the top band is around 420, we can say. The bottom band of the higher one is 440, and the top band is about 520. Okay, so it might be a bit difficult to see. Now, what we could do is we can go into analysis in the studies here on Sierra chart. Instead of looking at a 400-day profile, we can say, you know what? I don't really see too much of these balances. I don't really know what's going on. We change it to a 100-day, and then bam, what we can see is that it's accented more, but the balances, they don't change. They still stay the same based on what we had drawn out on the 400-day. But here we can clearly see from a visual perspective that they're the same. Pretty wonderful, rather than us going through price action, multi-time frame analysis, different hourly, weekly, whatever kind of candles to give us something that may not align. The other composite profile that we have here is the last 5 days of trading, and you can see that these extremes and the balances, they align with one another. So when we break this down, why are composite profiles so useful, right? Daily profiles, they're great. They have their pros, but they can be noisy, right? They do have a lot of good info. They're very short term. So we don't want to go day by day and try to identify where the balances are. It might leave us a touch bit confused. Instead, we can just zoom out on the bigger picture and see what's going on. The weekly profile is a version of the composite profile where we can get a nice culmination of volume throughout the week. But if we want even more, we can look at larger composite profiles that are several weeks to several months. We can expand into larger areas where we can really see the huge market participants that have aligned over the last several weeks or months, and those are huge points of interest which increase, right, based on the composite profile lengths. They show us where major market participants are positioned and where prices accepting or rejecting over time. So it helps us really understand the long-term balance and imbalance, the real support and resistance areas, where generally larger players like institutional level players really want to position themselves. And where they position themselves in the past, that's why they keep on holding those areas and giving us a nice understanding of the narrative and the context of what's going on. When you trade with a composite volume profile, you're looking at a map, right? You're not just reacting, you're navigating to the current situation of the market movement. So when we look at the key components of a composite profile, what most traders look at in a volume profile type scenario are your classics: value area high, value area low, value area, point of control, right, shapes and things. But here's what they miss that they might not see right away on the composite profile. Where is composite balance? Where is the balance zone? Where are high volume to low volume drop-offs? Is price above balance or below balance? Where does volume get thin? And how did price get there? The contextual narrative. These areas tell us where the market is shifting from balance to imbalance, which is very, very important in understanding key market context, understanding traps, and trade potential. So if we take a look at this here on Sierra chart, what I note as a balance is going to be an area that looks like a belly, right? Whether it's on the S&P or the NASDAQ. We can gauge both of these. So why don't we change the S&P so we can get a better visual cue rather than looking at this 400-day that looks a bit dull. So if we change that to a 100-day profile here on the composite, we can see that key areas and balances stick out more. So a balance area is a belly, right? This belly is going to be the prime objective of our search in the composite profile. So with that, the extremes of the belly, which sandwich this belly together, are going to be the areas where low volume nodes meet the high volume nodes. This is what people call shelves, edges, ledges, call them what you will, but it's a key extreme. These key extremes are the higher probability areas where strong market participants enter into the market, creating rejections or acceptance moves. Because with this volume drop-off, they have the ability to actually navigate price and create those larger price movements realistically. So when we're looking at these volume profile composites, what I'm trying to look for is where is balance, number one. So if I can draw out the balances here, right, in maybe a few weeks or days' time, this could be one entire balance. I can draw this overall larger balance with kind of a midpoint in the middle that splits up two minor balances on the S&P. And we've drawn our major balance areas. And what we're trying to do is operate in and around them, right? They're going to dictate how price is holding. Just based on classic auction market theory, if prices are inside of a balanced area, they tend to want to stay within that balanced area. If they're outside of a balanced area, we generally look for an expansion. So when we dive into more examples here with the composite profile, like I've said before, one of the biggest questions that traders ask me is, wait, what kind of composite profile should I use? Why is a 400-day better than 100 or 100 better than a 400? Again, truth of the matter is there's no immediate right answer. I know traders that combine the last 5 or 4 days of the volume profiles to get a better look as to what's actually going on in the most recent market, heavy-handed market participant action. I know traders like myself that use 100, 400, 300 days to get a very big view of the overarching larger balances. Now, if we're looking at something into all-time highs, obviously the most recent data is going to be the most important because we don't really have volume up here, right? There's nothing up here. So we can look at the composition of the last week, for example, or the last few days that have created movement into that high. The way that I go about the composite profile is I start with something very large, right? Whether it's a 200-day, 100-day, or even 400-day, they're all very interchangeable because what I'm doing is I'm sniffing out those major balances. That's my rule of thumb, something very large. What I'm doing from there is gathering the intel of where the actual balances are situated. So these balances are going to dictate where the highest probability trades are and context in the market movement. So when I'm looking at this, I can use the weekly profile in confluence with the larger 100-day profile in this instance to tell me that these are indeed going to be very important areas for us to trade. So keep in mind, composite profiles are very malleable, right? Like I said, you can group several different sessions together. There's no one right answer, and some other very common profiles that people use are monthlies, quarterlies, and even the last 2 weeks, for instance. So these are the general rules of thumb when we start driving into the overall composite profile. Number one, we're going to locate where these balances are. The great thing about these balances, especially if they've traded several times over, is that they stay consistent. When we're trading into all-time highs, obviously these balances shift a little, there are some changes to them, and they start creating their current all-time high balance. But generally speaking, if I draw my balances like on ES over here, on ES we can split these up for now, still all-time highs developing, but those are going to be the general balances that I use, right? I'm going to use those key extreme levels day in and day out. The second part is we have to understand where the key drop-offs are, right? These drop-offs are going to give us an understanding of how heavy-handed market participants want to react to price. The next part is contextual. So when we have a heavy balanced area, right? Let's say here on the NASDAQ, we have a very heavy balanced area. And I want to understand if price is outside or inside of price, right? So we can look at that from the closing prints and the reopening prints on the RTH. If I'm outside of that balance, my general prerogative is to try to see if the buyers want to sustain outside of that balance, realistically. If we're inside of a balance off the open, I want to ask myself, where did price actually come from? So if price comes in from above to below, there's a general understanding that there is some kind of downside press to go and target the next bottom extreme of the balance where the strong-ended market participants are going to try and push through. So the acceptance inside of balances shows us a heavy directional pull into that area for heavy-handed market participants. When we move outside, we expect some kind of expansion. The real edge is not guessing in the direction, it's waiting for price to come into the key zones when reading the intent and using things like order flow as well, or using other confluences in the volume profiles. So for instance, if I take a look at the volume profiles and the composite profiles currently, and how we set up a plan for today's session. So this is the general balance that we're dealing with here on the NASDAQ, right? We have the top at around 520, the bottom is around 440. Realistically, we're about to open outside of that balance, right? Obviously into an all-time high, so the volume is very thin. Realistically, if we want to hold the expansion, they should hold from that 520 area. If they fail, the expected move is to sell into that 520 to target the bottom band, where the bottom band has the expectancy to hold out the bid to go and target that 520. So just like that, we're only using 2 individual levels to trade from, and we're gathering information on the narrative itself. So if we take a look at how NASDAQ did shape up on the session itself, we can see some of the trade setups and ideas, right? Even from yesterday, we had this balance low that shaped up for a long. The first key balance area at 520, right? It holds out for about 25 points, nothing spectacular, turned into a loss. 440 area trades the balance low, it turns into a nice move back into 520, and what is 520 doing to price right now? It's holding it offer to maintain within this balance. So we know that once we've moved into this large composite balance to the downside from above, there's sell pressure for the market to try to push lower. If we look at the same kind of instance here and plan on the S&P 500, what we have is a key auctioneer. It's very tight. The thing is with these composite profiles, if I'm looking at NASDAQ, I generally want them to be 100 points and heavier to create a real balance. That's why into all-time highs they're still developing. On the S&P, generally 20 to 30 points at a minimum. So if I have something here that's about 15 points, it's very tough. So I can look at the whole thing and I can say, okay, realistically, if we lose the top of this balance into the low 30s, the expected move is into the midpoint as well as into this 6,400, where we have the expectancy of a very strong support. So the play is to sell as prices move into the balance and to see if buyers want to locate themselves at the bottom extremes where we have the expectancy of those heavy-handed market participants to shape up. So on the S&P, yesterday that midpoint holds out for a nice bid, and then today we find the lows into that 6,400. But if we look at it from another perspective, once we start moving into the actual balance itself, the higher probability is to look to sell this. Even though the long side from the bottom did deliver about 14 points, right, the sell side delivers about 30. So it's a very important thing to be directionally aware of the context as things shape up based on these profiles, because they increase the probability of the trade if you understand the direction. So generally, most traders, they can get chopped up because they're only watching price. They trade where price is, not where value is created and how value sets up. The composite profile shows you that map. It gives you the narrative. It gives you the context of where the real battle lines are drawn. So if you want to stop trading the noise and start trading structure and how heavy-handed market participants create volume in the market, you want to really study this tool to use it with patience, precision, and intent. So with that being said, we're going to wrap this up, and if you enjoyed this, you can get this template at community.tradeproacademy.com. It's pinned in our free Discord, and you can join us in our next webinar. There'll be a link down below breaking this down, along with a free PDF for a 7-day journey guide in understanding yourself as a trader psychologically and understanding how you can use auction market theory with composite volume profiles to get a better understanding of our system and develop your own. So with that being said, take care everyone. Hope you enjoyed this video. Hit that like button, hit that subscribe button, and we'll see you in the next one.